And heading to Nigeria, where its central bank kept its benchmark interest rate at 14% on Tuesday, resisting the finance minister's call to lower borrowing costs. Now, policymakers urge the government to spend more to drag Africa's top economy out of a recession. The West African nation is going through its first recession in more than 20 years, brought on by low oil prices and inflation accelerated to an 11-year high of 17.6% in August. The naira has traded at a record low of 425 to the dollar on the parallel market since last week. Finance Minister Kemi Adeosun said on Monday that the central bank should lower interest rates so that the government can borrow domestically to boost the economy.
Government grew by 1.99% in August 2016, which annualized to a growth of 3% compared with the benchmark growth of 13.28%. The growth in M2 was traced to exchange rate effect following the depreciation of naira in the second quarter of the year. Money market interest rates reflected liquidity conditions in the economy. Average interbank core rate, which stood at 15% on 8 July 2016, closed at 30% on August 26, 2016. Between July 8 and 26 August 2016, interbank core rates averaged 24.95%. The rates increased to 50% on July 15, 2016. The sharp increase was attributed to the drop in net liquidity during the period.
Let's get more insight into this decision. Deji Badmus now joins us in Lagos. Deji, welcome to the show as always. Now, of course, this decision was in line with expectation generally, but of course, the finance minister was also looking to the central bank to focus more on government and, of course, the economy rather than just rates. What has the reception been to this decision, of course, retaining the benchmark interest rate at 14%?
Well, Uche, there's no surprise at all. A lot of analysts here had predicted two outcomes, that the MPC was either going to retain interest rates at their current level or come down. And now the MPC has chosen to retain interest rate at their current level, not making any changes at all. And of course, the MPC put up a very robust defense for that. Yes, you're right. The Minister of Finance had actually called for a cut in interest rate, but the MPC made it clear that it would not be supportive of its fight now against inflation and trying to stabilize the naira. The MPC, of course, making it clear that yes, it is true, for instance, that if you cut interest rate, there will be credit for lenders to lend, but that some of this, most times, these lenders do not actually lend to the real sector, like manufacturing and agriculture. And there's been instances in the past where, for instance, the MPC had to cut down the cash reserve ratio, making liquidity available for lenders, but then they were not lending to the real sector. Rather, they were lending to traders who were using the money now to pile pressure on the naira, on the foreign exchange market. So the MPC making it clear that that is certainly not the way to go. And then it also made it clear that, look, its decision, the decision it took in July to raise MPR is beginning to yield positive results, because between July and now, the CBN governor made it clear that this, the foreign exchange inflow into the country was around $1 billion. So it just would not make any sense at all for the CBN at this time now to tweak or even make any adjustment at all, like coming down, for instance, when that MPR policy is yet to take is yet to take root. So it's most people say this is a wise decision. I think it's a wise decision. People had accused the MPC, the government of policy inconsistency, and I think the MPC would have been accused of policy inconsistency if in July it raised MPR and then in September it decides to come down. And so it has decided to stick with the current rate, and it says people should just wait, that the MPR should be allowed to take root and then we see where we go from here. But then we're beginning to see positive results, Uche.
Well, Deji, in terms of the outlook, what was the general tone at the MPC meeting today? Of course, government seems to be quite optimistic that things are not as bad in the economy, but of course the perception is very different among many observers internationally and local. So give us a sense of what the MPC's tone was.
Now, basically, you know, the basic reason Nigeria is going through this challenge, I must say, is because of the shortage of basically foreign exchange, to be candid, Uche. We've seen Nigeria's production, oil production level come down now as a result of militancy in the Niger Delta region, and then the price of oil in the global market is yet to pick up. So Nigeria is not making as much foreign exchange as it used to make in the past, and that is what the challenge is, and that's what the MPC pretty made clear today at its MPC meeting. Now, the government is optimistic that it would be able to deal with this crisis because, for instance, you know that it is now opening talks with militants in the Niger Delta. So if it's able to resolve that problem in the Niger Delta, it expects that production, oil production now will ramp up, and if oil production goes up, then Nigeria will begin to earn more. Remember, the budget benchmark for this year is 2.2 million barrels per day. At some point, as a result of the militancy in the Niger Delta region, we were doing around 700. So if the government is able to settle that problem in the Niger Delta, push up a production level, then that will certainly help the country. And then you know, of course, that the government intends to borrow extensively to fund the budget deficit. The Eurobond, for instance, is coming up in December. So these are some of the things that the government is looking at, and that's the reason why the government is pretty optimistic that it would be able to deal with this, because that this recession will be a very short one. And then we've also seen the government begin to spend on capital. The other day, the minister announced that the government was injecting 350 billion naira into the economy. So all these are things that the government is looking at and encouraging the citizens to look at that direction, and that this recession will be very short, and that Nigeria will come out of it in no time at all, and that things will get better. And of course, the MPC also making it clear that it is optimistic, that there will be stability eventually in the foreign exchange market, and that things will get better, of course.
Well, many thanks, Deji, for those insights. Deji Banmas joining us there in Lagos.